Good morning and welcome to Friday. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com. I'll get it right. It is Friday, the 11th day of February. The People's Open is in effect. We're going to have, close to 1 million people watching golf. We got the Super Bowl on Sunday, and the Rams and the Bengals. Probably not what the networks were hoping for. And then, of course, there's the Olympics that nobody's watching. Speaking of watching, are you watching what inflation is doing to everybody's wallets? I'm joined, like I always am, with my partner Jason in Colorado. Jason, maybe some dissension in the Federal Reserve, as yesterday James Bullard, he's the head of the St. Louis Fed, he also has a vote. Remember, not all Fed governors get a vote, but he has a vote in 2022 calling for an emergency 50 basis point rate hike and had everybody scrambling.
Yeah, the markets kind of didn't like the sound of that, did they, yesterday, Joe? Like quite a big sell-off. And Joe, we were talking this morning. You're like, no, there's no way for that. But maybe at some point they're going to have to. But just chatter right now, isn't it?
Well, think about this. He's not wrong. Matter of fact, he's absolutely right. They should have a meeting right now and start raising rates. I guess the cow's already out of the barn, so to speak, but this is how tedious the market really is. And this is why, we keep warning you about the banks. We keep telling you that it is not what it appears to be. And for James Bullard to come out yesterday and say, hey, we need to start getting in front of this thing and have this 50 basis point rate hike, and you should have seen people piling on, calling him immature, unprofessional, and how dare he upset the bond markets with these, horribly divisive comments like, hey, we actually need to start fighting inflation. And again, here's the problem. Like I said, there's only two choices here. There's no little magic beans that are going to save, 3, 4 rate hike. That's not going to do anything. They're either going to tell us we give up as soon as the markets start to buckle and go the other way, or they're going to need to put us into a depression. That's really the two options that are on the table, Jason.
Yeah. If we lived in previous decades, which we don't, there may be a little wiggle room, which is what they were doing 10, 15 years ago. They were wiggling around, right, Joe? They were just wiggling with whatever little rope they had left, and now the rope they're looking at, it's like, uh-oh, this is the end of the rope. What do we do now? That's what's happened, Joe.
And that's exactly what it is. Listen, we got $30 trillion in debt. The Fed's got a balance sheet of $9 trillion. We know all this stuff. There's these derivatives, these dark pools that none of us really know anything about that collapsed the banks the last time around. They didn't fix it. And if you actually took the time to read a lot of the stuff that was in the Dodd-Frank bill that they posed as the solution, you're going to find out that really it wasn't a solution at all. They didn't want to fix the problem. And this is why we're in this situation where we're at, where even like Reuters comes out and says, hey, even Bullard doesn't think a half-point rate hike really helps at all because it's not enough. Like I said, the last time inflation was this high, the 10-year note was at 11.5%. Right, we got a Fed funds rate right now between 0 and 0.25. we're talking about we need a Fed funds rate of 10 plus, Jason, not a half a point.
Right. I mean, essentially, you want to get your interest rates up at least to the level of the perceived inflation number. So 7.5%. Well, I guess, Joe, that would be a good start, right? And then the actual inflation probably more like 15%. Your 10% is probably a much better number to try to cool off the inflation. Which, Joe, that the inflation's getting kind of spooky how bad it might get, right?
Well, again, we haven't seen it all yet. When you start looking at, remember this too, and we'll get to this a little more in the next segment as well. Let's talk about food, right, and how expensive the supermarket is getting. And I've told you about low inventories on just about every major commodity out there. But, here's something else people forget. The Biden administration gave the 42-plus million people on food stamps an extra 25%. That just started hitting. I think January was the first month. They got an extra 25%. And I said it when they made the announcement, and I'll remind you all, here's what's going to happen. The price of food's going up 25%. Because by the time it's done, that extra money that was supposed to help everybody, what they're going to find out is, wait a minute, I got all this extra money, but I'm still only able to buy the same amount of food I was before I got the extra money. Yeah. Welcome to the new world. Where are the superheroes at the central bank? They're all ducking for cover. We'll be right back. 800-951-0592. And, man, how many times have we talked about how weak we have at the central bank, how weak of a president we have? Where is Jay Powell? Where is he? Right? If James Bullard is so wrong, which, let's face it, we needed that 50 basis rate hike a year ago. And then we needed about 5 more of them on top of that. They're ducking, they're running for cover. We have no leadership. And again, people think, well, you know what? They stopped sending everybody checks. So, it's going to taper off here. Listen, that food stamp increase, that's permanent. Let's not forget Social Security recipients. I know it wasn't anywhere close to what you needed, but hey, you got an extra 5+%. That's permanent. That's more money going in, more consumption going in, and these are the things, Jason, as to when we sit there and we saw yesterday's inflation number. Nobody should be surprised.
No, nobody should be surprised, and this is the old. This is just the old thing, Joe, where the government giving away money. The federal government has no business giving away money. It just makes the problem worse. Unfortunately, this situation we're in today was predetermined as soon as the central bank showed up. They just change the rules every 80 years or so, and then when the thing breaks, and then they just give you a new version of it, and that's why they call it the Great Reset, Joe, because we're headed for this change, because they don't want to lose power, but their system is broken. They got to reshuffle the deck, so to say.
Yeah, and people think it's not going to happen. It's going to be different this time. No, it's the same. And it's like I said, the Fed talks about all these tools they have. They don't have any tools. It's the same tool. It's called debt. That's the only tool they've ever had, right? And now we're sitting in a situation where confidence in the economy is at a low, right? Everybody's nervous. Nobody knows what to do. And we still have all of these issues and inflation running completely unchecked, right? It's just totally unchecked. News today, the IEA, the International Energy Agency, issued a huge warning about crude oil. Of course, I've been telling you for at least 6 months now. But the newest worry is that OPEC is having trouble maintaining current levels. And this is it. Listen, at $92 a barrel, everybody's pumping as much oil as they possibly can, and now things are breaking down. They have no more spare capacity. This is a huge problem, Jason, when we look at how bad is inflation going to get over the next 6 months. I think you can directly look at crude oil and watch how high things go.
Yeah, that's right, Joe. Yeah, I had mentioned it. I touched on it yesterday that it seems like there's these like kind of rolling shortages and things. You know, a little shortage on this thing, a little short on. I think they've these big companies, you know, Kroger, Walmart, whatever. They're trying to figure out where to place things just in time, just enough, barely enough, which signals, you know, if you don't have full shelf, that signals there's something wrong with the supply chains and in energy, Joe, like he's talking about. That's And the inflation coupled with that it's a problem. This is the kind of problem that if it continues the way it's going, you know, when they say, hey, we're going to get 7.2% inflation by our estimates, and it goes to 7.5, and when it's moving faster on their own bad broken numbers, Joe, where are we going to end up in the February numbers, the March numbers, the April numbers, when they're still right now they are still printing more money by their own admission, Joe.
Yeah, I mean,
they're still printing.
They're still buying some bonds. We don't know what they're doing behind the scenes. Yesterday, we saw the 10-year note climb over 2%. Right now, it's almost at 2.05, which, again, historically, that's a super low number. And this is the biggest problem. Because this number, think about how much higher it really has to go to be able to ward off the inflation. And this is the problem because they know, listen, they know it, we know it. Do you blow up Wall Street? Do you send us into a depression? And I wish I could say it would only be a recession. That's not the case. Listen, they created this boom and bust cycle. This is what they've created. Right, and this is why, you know, think about it. Why has gold in the last 22 years gone from $250 to almost $2,000? Well, guess what? Because they keep making the problem bigger, and they blow the bubble bigger, and then they blow it bigger, and then they blow it bigger. And now, here's the worst part, is as this biggest bubble yet is getting ready to blow up, we've got weak leadership everywhere. We got weak leader in the White House. Jason, we got an incredibly weak Federal Reserve leader, and this is going to be a recipe, as they call it, you know, the Great Reset. Just look at it this way. All that wealth you've been working for, they're coming for it, Jason. It's just that simple.
Yeah, let me give me 2 minutes. We were on the Faking the Truth yesterday, Brian and myself, and on Thursdays we have JD, the Colorado Deplorable. He comes on and does a show with us every Thursday. And he's a big Trump fan, and he's suspicious of Republicans, but he thinks Republicans are the answer. Looking economically at what's going on, I always try to look at the powers that be. What do they want, or how are they going to achieve what they want? And he brought up Build Back Better, how it didn't pass. And I told him, well, isn't that suspicious? You know, one Democrat just sort of stood up and was like, no, I don't want to vote for it. Well, I told JD that, well, the timing of Build Back Better with where the markets are doesn't work. Passing a big spending program in the midst of when you want to stop spending and have these so-called, hey, we're going to stop inflation, doesn't work. And we all know that it looks like the Republicans will win back the House and Senate in November of this year. So if you just go off the logic that they want to keep spending money and that they want to that the inflation is probably a better path for the rich people that run our government, Joey, we could very easily see, okay, so Build Back Better didn't pass. The markets have a flash crash when they actually start upping the rates. They stop spending. Maybe they start selling off their assets. We have the same thing we had in 2020, a flash crash. Comes down 20, 30, 40%. And then, oh, well, we're going to start spending again. They give you all the rosy news. We're going to spend. We're going to do this and that. We're going to go to lower rates. We're going to take those interest rates back down. Whatever they do, Joe, just to get that fake recovery very quickly. And then before Biden loses the Senate and the House, they can pass the Build Back Better, because in an emergency crash, well, we need to start spending money to fix everything. So very easily, Build Back Better, I think, gets passed before the end of this year, before the midterms. And then, Joe, I don't know how long they could string this thing along, but it seems to me that they love to crash this thing on a Republican. So Trump gets reelected in 2024, and then at that point, we may see a massive crash. I mean, the ending crash. But I have a feeling that they're doing this head fake crash just like they did in 2020. They may be doing one of those right now, Joe. That's still going to be bad. Yeah, look what gold did when they did the head fake last time. Look what gold did, all-time highs.
Yeah, I do. When we look at how do I see this playing out, I think that's probably exactly what we're going to get. Because let's face it, we've known this for a long time. The only solution, and it doesn't matter who we elect, D's, R's, it's all the same. They only have one solution: spend more money.
Yep.
Right? Create more debt. I mean, that's their answer to all of these things. And I think, well, what we're going to see, we got 5 weeks until the meeting. Okay, so 5 weeks until that meeting in March, where two things happen. Number one, they're going to be done buying bonds. Okay, so they're not going to add any more to their balance sheet, at least for right now. That's a given. That's for sure happening. Now it's a question of how big of a rate hike are we going to get? We're going to get one more inflation report before that meeting. If that number's still in the 7+ range, I would hope that they would give at least 50. Of course, at that point, they should probably go a full point and start saying, hey, listen, get ready. We're going to be raising full points for the next X amount of meetings. But I think what we're going to see, this is just my guess, right now, if the meeting was next week, they'd only raise 1/4 point. That's just my opinion. Yep. We'll see over the next 5 weeks how bad it gets. There's a chance it can be 1/2 point. It's not going to be more than that, which is a shame, because this just proves how little they care about us, right?
Well, Joe, maybe it'll be just a flurry of 1/4 point raises more frequently, because I heard even.
Well, and I think that's going to be the big thing. So to finish what I think is going to happen, they're all going to wonder, okay, what is the message they're going to send after that hike? Hey, get ready, right? We're hiking for the foreseeable future. In other words, to Jason's point, every 6 weeks here's a 1/4 point. Here's another 1/4 point, another 1/4 point. And I think they're going to go 1/4 point, 1/4 point, 1/4 point until they break it.
Yep.
I don't think we're going to get taper. They're going to talk about it. We're not going to get there. And I think to Jason's point, by the time we're all said and done, we're going to get some extreme spending out of our elected officials, and we're going to be right back at zero, and we're going to be right back at the Fed piling onto their balance sheet, and I think we're going to have a huge, huge rally in gold, a huge rally in silver, and I think we're going to have a new normal. I said it 15 years ago when they started this whole 2% bull crap. They're just going to raise the number. And we're going to find out. Here's what I think we're going to find out. Anywhere around 4 or 5%, they're going to call that victory, Jason.
Do you think they can get that far?
Yeah, I think we're going to find that 2% number that's going. They're going to end up saying, well, it's not 2, but and get ready. Here's one. Well, it ran below 2% for like 13 years.
Right.
So we're going to run over 2% for the next 13 years. I think we're going to have the rest of this decade where we're going to see sky-high inflation, unabated, and again, I think whenever the big crash finally does come, that's when we're going to get the digital money and the reset, if you will, the wipeout will happen.
I think you're right, Joe. And maybe what they do is run that 4.5%, 5% inflation, say, well, our goal is 3.5%. We're going to keep pushing hard to get there. And we're successful because we got it down below 8.5% or wherever it gets to in the next few months, Joe. So maybe that'll be be the thing.
I'm telling you, they'll call victory.
Yep, I think
they're
you're right.
going to call victory on it. And again, think about 5 years at 5%.
Oof.
5 years at 5%. That would take $100 and turn it into 75. You would need whatever cost $100 today. 5 years from now, $125 just to buy the same stuff. And again, but that's with their number. So you got to know this. If they're saying 7.5, to Jason's point, it's at least 15. Can you imagine 5 years of 15%?
2 years of 15%, Joe. There's just no small businesses left in the world.
None. And you're going to see it. Jason and I have been talking about this for such a long time. I think that this heading into this summer, it's going to be a horrible, horrible time for a lot of small businesses in America. Patriot Radio News Hour. We're going to be right back. 800-951-0592. We got about 50 $10 Liberties. These are the half-ounce pre-1933, right, 1866 to 1907. They're at $1,065, so that's a nice little discount there. $1,065 on some half-ounce Liberties at 800-951-0592. Unleaded gas is up 5 cents in a day. Right now, unleaded gas is up 5 cents in 1 day, and I think we're going to see several days over the next 6 months where we're going to see unleaded gas prices jump 5 and 10 cents a day. Gas Buddy, whose job it is to predict a lot of different things, says the case for the highest gas prices ever continue to build, and they're saying this isn't really so much a demand thing. They simply are like the supply just isn't there, and they said that the previous all-time high, this goes back to 2008, we had that one spike, it only lasted for a few weeks, $4.11. I'm pretty sure, Jason, we can add at least $1 to that number. I think most of the country could end up seeing gas prices, going to end up seeing gas prices starting with a 5.
Yeah, Joe. Even if the Fed actually attacks inflation with some meaning, it's going to take some while for it to reflect. So the inflation we're seeing can easily get more severe the next few months, and then gas prices will just be really high. I mean, by the time they actually try, if they actually do try to lower the inflation, we could have gas at $5 a gallon easy by the spring and summer.
And that's assuming this Ukraine thing's just a whole lot about nothing. If there is an actual, call it what you will, war, invasion, whatever it may be, forget about 5, right? I mean, I don't know how high it could be. My guess would be we could potentially see crude oil at $200 a barrel in that scenario. It just depends on how that plays out. But for setting all of these things aside, just nothing bad happens between now and May. We're probably going to look at something very close, if not over $5 a gallon for gas, and at least Gas Buddy's finally saying what it really is. Hey, we just don't have enough. There's just not enough supply.
I got a question, Joe. Are you going to watch this crypto Super Bowl Sunday? You're going to see this thing? You're going to see how many crypto commercials are on the Super Bowl, and watch whatever ridiculous halftime show they got. I'm actually kind of interested to see what the propaganda is going to pop up on Sunday.
Well, isn't that why you watch the Super Bowl?
That's why I'm watching it this year. This year
right?
really seems there's going to be a lot of stuff to watch. Don't you agree, Joe? I want to see what that halftime show and these commercials are going to be, man. I'm kind of wondering. It seems like there's messages being sent in that game. What do you think?
Oh, absolutely. I'm going to tell you right now, we're getting trained for the digital money. We're getting trained to accept 5G and the spying and the data collection and all of these things. And, of course, we're telling you, look at the other day. 40 of the Starlink satellites fell out of orbit because of a solar flare storm and the fact that there's going to be, 5,000 of these things circling above the earth. And people are wondering why all of a sudden there's all these chip shortages and why is there so much energy being consumed right now? And a lot of it has to do with just that, this new digital age, right? Between crypto, between digital money, and of course the 5G technology and all the servers and all this stuff, Jason, this is where it's all going.
Yeah, I mean, inflation is a good cover story for building a new world. That's for sure. There's you would think in times of inflation and prices going up, you think that people, let's stop building so much stuff, man. This might not be the time. But no, there's a new infrastructure being put into place with 5G. We covered on a half empty cup of Joe with Virginia Farmer, where 2,000 satellites got blown away with 2,800 or it was 2,800 satellites with 2,000 new ones in one year, whatever those numbers were.
No, the other way around. We had 2,000. We added 2,800 satellites in a single year, and that was in 2021. And they want to do more than that this year.
Right. So, I mean, kind of interesting how things are wacky in the economic markets, and very secretly here and there. Well, here's a company, here's a warehouse in China building this, and here's in Taiwan they're building that. I mean, everybody's busy building and building and building. It makes you wonder where all of these trillions of dollars are actually being spent. It seems like they're building something, Joe, and we all know there's an Internet of Things, and the Internet of Things is going to include everything and everybody at some point.
Yeah, it's just nuts. Unilever out again. And again, Unilever, Procter & Gamble, right? These guys are pretty much your grocery store. The CEO was out yesterday and just said, hey, this direct quote here, the signature characteristic of this calendar year is going to be skyrocketing commodity and input cost inflation, saying that the company has no choice. They're going to that this inflationary cycle is going to be a very, very tall order. We're going to continue to have to be raising prices, and the bigger part, and when you start listening to what they're saying all year, this is the big, and this is what I've been telling you. We're not at the end of inflation. We're still in the early parts of the inflation, and all of these guys are all saying the same thing. Listen, we're going to raise prices 5%. Well, 90 days goes by, and they, restocking to make other products again. They're like, but the input costs are up 10%. Okay, well, let's raise prices 8%, right? And 90 more days goes by, and they're like, input costs are up 20%. Okay, let's raise prices 15%, right? And this is the pattern. It's almost to the point now where every one of these major companies is coming out about every 90 to 120 days, Jason, announcing price hikes.
Ain't gonna stop soon, Joe. That's not stopping soon for sure. It's I guess the question is, when will it slow down and stop? That might be the more important question. When? We'll be right back. Everybody stay tuned.
800-951-0592. The gold markets, I've got gold down $1. Kitco's got it up $8. And again, all this electronic trading stuff. after hours, before hours, but gold's at $18.35. Silver right now is about $23.25. Right now, $10 Liberties on sale today at $1,065 at 800-951-0592. I got an email from one of our listeners, and it was talking about taxes. In other words, in buying and selling gold, a lot of states, Arizona being one of them, has removed taxes when you buy and sell gold. So does that mean you can now buy bullion? Because remember, we like pre-33 gold better than any other because it's the most private way to buy and sell it. You can buy it, you can sell it, you can trade it, and you never, ever have to give out your Social Security number or worry about a 1099. Here's the thing. It's great that the states are saying, hey, we're not going to have any state tax. Now, some states in cities really will charge sales tax. It just depends on where you live. Why are we headquartered in Arizona? Because you can buy here without sales tax. That's a huge advantage. But the problem is on this, guys, is that doesn't do anything about the federal tax. And that's where, well, let's face it, the state, when you pay your taxes, right, the state part is a tiny part. So, no, that does not preclude you now from getting away with being able to sell a 10-ounce gold bar, as an example, and not get 1099. That's not how this works. So, these states, it's great, but it really doesn't change anything when it comes to different types of gold and silver and reporting requirements, Jason.
Yeah, I mean, we specialize in that pre-33 gold, Joe, and when I was doing this by myself before I joined up with you, I did different kinds of gold and silver, but I was always listening to the Patriot Radio News Hour, and I started getting into pre-33 gold before you went on the air in 2018, looking for someone to run Colorado. And then I got involved here, and I started understanding it more and more and more. How that's just, if you're going to choose what gold and silver to own, yeah, the pre-33 gold and the pre-64 silver that's a pretty good place to be, Joe.
Yeah, absolutely. And again, I love that. If you guys ever have questions, email me. Double J at allamericangold.com. And I'll gladly email you back, or I'll take it on the air and answer those questions. That was a really great question, by the way, because you're seeing a lot of states. I mean, you're going to hear a lot more about this. States getting rid of the taxes. States talking about trying to make gold and silver legal tender. I think you're going to hear a lot of that over the next several years as we continue to watch how this whole thing plays out here. Even with our IRAs, we do a lot of precious metals IRAs. We now have choices as far as depositories go. For the longest time, you had to send your product to Delaware. Well, now you can say, well, I send it to Delaware, or you know what, I want mine in Texas, right? Because states are starting to build their own depositories as well, Jason. Yeah,
I mean, one thing about the economy having stress and the Fed's Ponzi scheme sort of showing its true colors is that there's a few states out there that are trying to solidify their positions, just in case, right, Joe? Texas having that depository down there is a pretty strong one, and that's refreshing to see. I just wish we can get back to the state banks instead of these big banks. The state banks in American history were very solid, and they ran independently, and you could either trust them or not. They ran like any other business. If it's successful, it works, and if it doesn't, it fails. We just don't have that today, and I love the gold depositories. It's a good idea, Joe.
Yeah, so there's a lot of things happening, but just understand. You know what? Marijuana's a great example. Right? I mean, all kinds of states say it's legal. Still doesn't change the federal law, right? So you still got to do idiotic things. You can't even run like a normal business. It takes like CBD is a great example. The CBD that we sell, which is such a great product. Like, there's no THC. There's no of that. You know, when you think marijuana, you know, getting high, there's none of that in that product at all. And yet we have to have special permission. We went through, it was like a 6-month process just to be able for you to for us to take a credit card for you to order CBD products. We pay a higher fee, right? Because of these same things, because of these federal laws, and it's the same thing here in the gold and silver markets. I think you're going to see a lot of states. We're seeing tons of countries, right? Everybody wants it, but again, these federal laws are going to, you know, I don't see those changing, I guess is my point, Jason.
Well, yeah, and we actually get charged just to deposit cash into the bank, right, Joe? It's one of those things. We accept cash. I mean, that's what gold and silver is about. But yeah, we deal with a lot of cash, and so the banks decide, oh, we'll just take a piece of that, right, Joe?
Our banking fees here at Patriot monthly, well over $1,000, closer to $1,500 a month in banking fees. And the majority of that is because we're putting cash in the bank. It's absolutely insane. Patriot Radio News Hour, final segment coming up. 800-951-0592, gold 1837 now. Breaking here. This is a big thing, I think, anyway. We're being told that there is going to be a Monday closed board meeting of the Federal Reserve at 11:30 Eastern Time. So James Bullard came out, said, hey, we need to hike right now. They tried to laugh it off here. Now they're saying the goal of the meeting is to review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve Bank. So that's what they're saying the meeting is about. This has some interesting connotations to it. Could we get a surprise rate hike on Monday? Possibly. It also looks like, Jason, they're gearing up to change. You know, right now the banks are borrowing money from the Fed and getting paid to do it. Looks like that's going to come to an end as well.
Yeah, and this is all just coincidence, I guess you could say, Joe. But I always said that we had this coronavirus thing for 2 years, and hey, we just ended the NCAA. Remember, the first thing they canceled was the NCAA tournament. You know, all these sports had to cancel these games, cancel those games. But the one sport that they didn't mess with was the NFL, Joe. And they're ending their season Sunday. Well, now things can go crazy because, well, the NFL. I just find it weird, Joe, that the NFL, the biggest sport in the room, they always get their season. They always, they get the full season. They get to have their Super Bowl. They don't get anything canceled. And we'll have a Monday meeting. The NFL.
Eric used to say it for years. Hey, the holiday season doesn't end until after the Super Bowl. So apparently, right after the Super Bowl Sunday, Monday, 11:30 Eastern.
Oh boy, we'll be on the air, Joe.
It's going to be crazy. The fact that they scheduled it and said this is going to be it, I expect a rate hike on Monday right now. Why else would you meet if you weren't going to do it?
Joe, the guys I was listening to were expecting an emergency meeting and a half a point emergency rate hike. And I don't know if they, I don't know who's going to be correct or not, but it's sure starting to smell a lot like a rate hike of some sort, doesn't it?
Yeah, it's going to be really. And again, here's the problem. Like I said, they admit to 7.5. It's probably 15. We're so far away. And the question really is going to be, how many rate hikes can Wall Street take? And we're going to find out because I don't think it's that many.
Well, Joe, let me jump in because the numbers they give us are always the numbers from previous weeks or months. These guys, I'm telling you right now, they have their finger on the up to the day information. What if the next inflation number is going to be 8.5 or 8? Right? What if they know that's where it's headed? That's why you have to have an emergency rate hike. It's like, well, okay, we can't let it go to 8 next month. You know what I mean, Joe? And
I'm going to tell you right now, I think that's probably more than likely, that is probably exactly what it is. Because you got to remember, this data is behind. So they probably already know, hey, in 4 weeks, by the way, we're coming out with a number that's going to be, like Jason, it's going to be 8.5. We better do something to show that we're trying to get out in front of it. So, Katie by the door here, gold 1837, $10 lives at 1,065 at 800-951-0592.